Good morning, folks, and welcome back to Almus Market Mornings. It seems we are living in a world where each day provides a new threat on tariffs. President Trump, in an interview with CNBC yesterday, said India's tariffs will be raised substantially in the next 24 hours. As of now, there are no official response on this, and we await further clarity. Moving on, today, Reserve Bank of India is set to announce its interest rate decision. Remember, this would be in the backdrop of the retail inflation remaining quite low. In June, the headline number was at 2.1%, below its targeted band. In the previous meeting, RBI had changed its stance from accommodative to neutral. Good morning, JK. What are your expectations out of today's MPC decision?
Good morning, Swaraj. Perhaps this meeting is having expectations that is quite divided. Some of the renowned analysts in the Indian market are calling for a 0.25% rate cut further from RBI in view of the challenges that we are facing on trade. And also, inflation expected to remain subdued in the coming months, even in the festival season. However, I am of the view that the RBI will hold on and await full transmission of the substantial easing that they have done so far. While inflation has come to 2.1%, there has been some base effect advantage as well as food inflation. Traditionally, in the festival season, that goes up, and therefore, RBI would be guarded not to hurry into another rate cut immediately. Well, they will keep options open in view of the new challenges that Indian economy is facing on global trade and its impact on the growth as well as our exports. However, if we do see a move of 0.25% as many expect, then we could see further weakening of the rupee. And in any case, the current up move in the USD INR is somewhat aligned with RBI's actions, because they themselves have been buying on dips, and also um, there can be a substantial impact, negative impact on our exports if the even with the current rate of 25% and if the threats of even more substantial tariffs are implemented. I think we are in for a big jolt on our exports and also on the growth. So those are the things that RBI would be keeping in mind when they take a policy decision. On other aspects, inflation, they could downgrade, or rather, their forecast can be lower. Some even indicate it could be as low as 3.1%. From 3.7%, they had brought it down to in the last meeting. Growth is one area. They could probably retain the 6.5% growth projection. However, with the caveat that they would like to see the impact of trade wars in the coming weeks and months to reassess the same. So all in all, this decision on rates by RBI could see some impact on the rupee if there is a cut. If there is no cut, it will be neutral for the rupee. That's how I'm seeing it. Yes, definitely, the market will be equally keeping a very eye on the fresh announcements or tweets from the US side, particularly the president's tweets, which will sway the market. But surprisingly, Swaraj, yesterday's indications of substantial new higher tariffs did not move the offshore market. Rupee has been steady at 87.80, and even the futures, the stock futures, are not showing much of a negativism. Perhaps this could be due to the investors wanting to wait for RBI announcement today. We'll see then if there is more volatility around the RBI announcement. On the global markets, after the weak non-farm payroll report, we have had another weak data yesterday. The ISM Services Index, which is closely followed for the future expectations on business activity in the US, fell to 50.1, almost near the contraction territory from 50.8 of the previous months. And this was much weaker than most had expected. And employment actually again fell to 46.4 from 47.2. The new orders, which have been guiding the index higher recently, also fell from 51.3 to 50.3. So all around there has been a weaker report. This also follows a weaker ISM manufacturing report that we reported earlier on Friday. So definitely the activity level in the US is dropping. Already employment has shown a leading indication for the economy to weaken, because when hirers or the business people tend to remain non-committal on additional employment, that is an indication of some sort of a caution or maybe some pessimism on the economy and the businesses going forward. So that is where the US economy stands. No major impact on the markets. Of course, we did have some minor fall in the Dow, and S&P 500 and Nasdaq also gave up some gains of the previous day. But they are now seeing some big swings at near about the historical highs, waiting for really a very strong positive trigger if it has to go even further higher, but remains vulnerable for any even minor and negative news. So that's where it is. Bond yields have been quite in rangy. Now the main trigger for bond market as well as the currency would be next week's CPI number from the US, where it is expected to probably show more impact from the Trump tariffs. And if it does show a higher number, then that could strengthen the case of Powell for holding rates steady. But if it does come subdued, I think it will strengthen the case for rate cut. Powell can no more hold on to his argument. And market already showing 91% probability, Swaraj, of rate cut in September. That's a big jump from around 35% that we were seeing a week back. So that's where the US market stands, and all focus on today's RBI meeting. Rupee, where it goes, 88 likely to be tested, perhaps break goes to 88.30, and the dollar index I think remains rangy. Uh, Perhaps some more correction of is on the cards. While we have seen a reversal of the up move last week after the jobs report, technically we are not still seeing full resumption of the downtrend in the dollar so far. Or rather, I would say the downtrend or uptrend in the euro doesn't seem to be getting that momentum so far. So we could see some more correction in the dollar before we see a resumption of the medium-term downtrend. So we're at crossroads for the rupee and also on the global markets, because stocks are at the highs, yields are at the multi-month lows, and dollar is staring at another downward move after a pause. So that's where we are at this morning, Swaraj. Thank you.
Thank you, JK. And it seems so many uncertainties, and even for the MPC, this will be a tough decision even for them, because for everybody, it is, even for our government, even for the central bank, these are very unprecedented times, especially the kind of reaction we are getting out of the US. And I was actually reading an article which a government official had commented, which said, there is no template to deal with such kind of events. So it's
Absolutely,
completely,
absolutely.
yeah. So it's completely a bouncer, and it's something new for everybody. Anyway, when it comes to the MPC decision today, it seems the camp is divided. Some are calling for a 25 basis point cut, while our expectations is for rates to stay as it is. Because there are some things which the RBI will be looking at, which is the base effect advantage for the inflation numbers and upcoming festival demand, because that may keep food inflation elevated, and that can be one of the reasons for them to hold rates. As of now, the rupee's weakness seems natural given the threats on the trade front. From the MPC, growth and inflation projections would also be closely watched. When it comes to data yesterday, global markets, we had the US ISM services, which was a very weak report. We had contraction Not contraction, but weak numbers from employment index and new orders as well. As of now, there is a jump in the rate cut probability. 91% market is pricing a 91% probability of a rate cut in the September meeting. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.